Hey, g'day, Trey. Sam here from Trade to Prosper to give you a crypto update. This time it's on Bitcoin, and we have a number of levels. Key levels, we're in a range, and nothing's been validated except that the head and shoulders that we're talking about is invalidated based on this move. So let's have a look at what are the key levels. This big one here is a 21 monthly EMA, so it is playing a key role. Along with this, I believe, is 100 weekly. So both of them, and you can see the confluence. And what we had was we broke above it, and we slightly swept above this level, which is and you can see the wick there to trigger the stop losses. So this was a lot of shorts coming in here, and I believe this is a short squeeze just to go above this level and get all those liquidity and then come back down. So those losses were triggered, and then even went up to do this one here. So they really, it was a squeeze for the shorts. So that's how I see it at the moment. And we're still in the range. Key levels, this one here, the 200 moving average, and we've got the 200 EMA on the daily, and we have the 200 SMA on the weekly. So those are two key levels, and we don't want to see the daily close below that. Otherwise, we're looking to go further down. We'll have a look at the macro, but we won't do that right yet. So what I was expecting, I did trade Ethereum rather than Bitcoin, and I did enter around there. I came in a bit late. I had a gut feeling that it was going to go up, but it just didn't time it well. So anyway, so I did take profit here with my Ethereum equivalent, and knowing that I need the buffer in case it comes back down, and sure enough, it's come back down. So I didn't do the best I can because I thought this was likely to come down, and then go back up and look for further highs. And you can see from this perspective, this is the volume control. That was perfectly. So we wicked above it, and that became the resistance, and that was the entry for the shorts. So the bears came in. You can see how the charts make sense, and that's where things are taking place. The volume of control is right there, and we had support there now. So can it hold? What are we looking for? So we have this range and this range for the short term. So let's talk about that. If price goes up and then comes back down, then that's your short signal to cut further down. And it's likely to sweep this level or further down, just to sweep this level here, just below this, because that's where the longs came in, but it's likely to be this area for the longs. Or you could still just do this as well because we have a number of areas. This is like a small Wyckoff accumulation. The other aspect to this is that we do see that as a trend line with lower highs and potentially a wedge formation. And if this comes down, sweeps down, we could still have this wedge play out. If price goes above and then stays above, it's likely to break up. So this will be another way of looking at it. But it needs to make smaller, higher highs. And anyway, so that is the other. Right now, we don't have any signals, but it is a major area. What we want to see is this level. If it goes above this level, then we can probably go long a bit. So that's your risk reward. But the problem is that could be A, B, C, and then that's what it is, a risk area. It's not the best place to take a trade. We just need to see price go. If price goes above and then comes back down, then that's your shorting entry. If price goes up and hits that and comes down, then we are likely to go further up. I would trade anything that goes above that level. So if we see that, we'd like to go up. Yeah, there's the possibility that it could come back down, but it's a trade worth taking because this is the next high range. As you can see there, this is the neckline. That was a swing failure pattern here, swing failure pattern there, swing failure pattern there, and that's a swing failure pattern as well. That's actually probably, you can categorize that as a failed auction. So that's how I'm looking at this market. If it drops down, so if it goes up, chances are it could get a rejection and then come back down. And this is where you could take your shorts, and this is where you could take your profit. And you can see how in the past, this is where the stop losses were, and then when price came back down, they actually look for this level and kill all those. So that was the squeeze, and this one was slightly further to that level here. So we are looking for equity, and we have another chart that covers all that. So let's have a look at that one as well. Where are we? Here's the one. So here we go. So these are the levels that I'm interested in for potential shorts, because it's all just above where prices come down. So stop losses will be up there, and if this is a breakout wedge, then we have a good chance. Right. So if you look on the macro, actually I'll bring out this one here. You can see it from a macro perspective. We're on the fib levels, very compliant, and we have our key levels. That one is the yearly level, interesting enough. So the yearly level comes from the yearly candle. And so that is a key level of resistance. And you can see how, yep, we worked above it, but it is still resistance, a point of control for this level as well, and the neckline. Let's have a look at another chart. This one will give us an indication on what's happening from a Fibonacci. So if you look at this, we just hide this for a sec. Top to bottom, you can see the 618 is our major resistance. That explains why we have that major resistance, and of course there as well. But the Fibonacci is telling us the 618 is the major resistance. You can see these Fibonacci as major support, and we came below it, and now we work up. So and we've got the 21 monthly moving average. We have this moving average as well as support. And if I was to put that other chart back, where is it? Fibonacci, this one here. When we use the other aspect of this as being the top and this as being the bottom from a Fibonacci perspective, you can see how the 1.272 plays perfectly to that level as previous resistance. We've got the 1.414, and so this 1.612 could be a strong resistance as well. So this could, if this was to break up past this level, then I do see this as a strong resistance and then come back down again. And that's coming around here as well. So that is going to be problematic. That is about 34. So I see that as the next, and here are where the stop losses are. So that equates to liquidity as well. So from a Fibonacci perspective, we are making a lot of sense. Let's clean that up. We're not bearish yet. From an indicator perspective, we do have some. So what is this? This is the daily chart, and we have something like a triangle of some sort, and we are ranging. We also have this as well, I suppose, all the way through. It's not going to really help us. Can this one help us? No, it doesn't. The daily's like that. If you look at the 2-day and the 3-day, this one sort of helps us a bit more. It does seem like we are in a wedge of some sort. Anyway, that doesn't quite help. Let's look at the 3-day chart. Okay, so you can see it, the top is really flat, and that was a major bearish divergence, and that's played out. And so what we have here is this. So if we drop that, that's going to be bearish. What we have here, as you can see, the moving average on the 3 days is probably a good one, good sign. You got the rejection on the 3 day. So until we go above that moving average, we're not going to be bullish. But we might be coming back down here for support, still on the 50% range above, still bullish. So we just needed the bulls to come in. The pattern looks good, and you can see the Fibonacci levels that make sense. From a candlestick perspective, it's not that bad at the moment on the 3 day. We need a real bearish. If we close below this line, then we are going down for sure from the RSI perspective. Any more charts that we can look at? We've covered that, and this is the macro picture as well. So we're on the channel, and the middle section makes sense along the way. There's a lot of confluence, support, the wicks. So this channel, if we break above it, this is where we go bullish, and that'll be the first Fibonacci that I'll be looking at, which is about 34, 35. Again, we've got the 618, so that's exactly there, matching that one there. But this channel, there is a possibility that we can come down. I don't think that's going to be the case. Now, here's the main thing that I'm looking at. In the past, if we were here, this was a major resistance in the past. Let me just highlight this. This was a major resistance in the past, about 10K, 2,400. And we had this as well, some formation. Actually, let's just do this. But that doesn't quite do it. Put that back. Now, what we see here, that is a major resistance, and what we had is this complex formation. All the moving averages, the main ones, all underneath. We can hide that one for a sec. So you can see price. We had a bit of complexity. It didn't go down. It just stayed there, and we're here for 3 months before we move up, and then the bull run starts. Now, the sentiment is all bearish. Many things are bearish, and this took 3 months. We could still be here for a while. All the moving averages are below, which is a good sign, and we could be here for a while. The squeeze could take a while. So even if you can try to trade in that bucket, but until we hit this trend line, we're not going to have any idea if it's going to go up or if it's going to go down. The Chinese market with the manufacturing data is apparently very unexpectedly low. So the stock market in China has dropped, and that is probably a bearish reason as well. And so certain things aren't looking bullish globally. The economies aren't really doing well in terms of manufacturing, and China is one of those indicators. So if the Chinese markets slow down, then does it mean it equates to crypto? Who knows? If we look at the Dixie, it's given strength, and so this is another key indicator. If we break through this is what I'm hoping for. We get a reversal here, 618 level, 0.68. Today's been a bullish day, so Bitcoin has dropped. If this continues up, and it's very likely to do so, but it's at a key resistance range. So if we look at that from there, that is a key resistance range, and we'll be sideways before we make a decision. So this is the Dixie that's going to make a difference. I'm hoping this drops below that level. Looking at the RSI, we don't have the crossover yet. MACD is still bullish, so still an uptrend, and Nothing early yet. This is slightly turning bearish, but that's about it. And if we look at the SP 500, we had 2 days now, and it's dropping. So the correlation is not quite there, but it is a bearish movement. So Bitcoin probably dropped as well. The other aspect is the CME. Let's see. Let me get that CME chart. There was CME gap. Let's see. So we'll close that CME gap. There was the CME gap there. And this is an old chart. And it looks like the lines are all making sense. So you can see all the gaps have been closed. This one's the recent one. Now, does that mean it will bounce back up? Who knows? But that is a CME chart. And we do have something. This is one perspective. Is it enough? No idea. We can wish it is, but there's many ways of looking at this. We can also look at it from this perspective. And there could be a bit of a fake out there. So resistance free, but yeah, it could be a fake out. Looking at this macro, does look like a topping off structure. And yep, it came down below, but this could be a neckline. Even though it came down a bit, just from a macro structure point. Yeah, so I had my levels of resistance. Let's look on the daily. These are key levels, guys. That does look like a reversing structure, but the squeeze can happen in there, like I said, and then break up to the upside. Wonder if that's going to take place. Strong support, and we've closed that CME gap right there. But this is some old chart, as you can see. Last chart, let's have a look at Tether. Tether dominance and Bitcoin dominance. We'll have a look at that. Tether hasn't broken up yet, so okay. That was our key level. Tether did break above it and then came back down. Interesting. Still haven't lost that level yet. This is a hard chart. You can see the key resistance levels. Tether's not really going up, so very much aligned with Bitcoin. And let's see Bitcoin dominance. Where is it? I thought I had that. Yeah. Damn it. Bring that out as well. Bitcoin dominance. Here we go. So Bitcoin dominance has dropped. If it drops further, it will be nice. It's interesting how the alts have dropped, but Bitcoin. So we've got all the alts dropping, but Bitcoin dominance. Bitcoin is dropping for much harder. Mate, that could be probably related to Ethereum. So if we look at the Ethereum chart, Ethereum is looking bullish. Definitely bullish. I'm mostly in Ethereum, so it's probably good to be there. ADA is doing the same as well. Where is ADA? ADA is doing very well against Bitcoin. It might break out to the upside as well. I don't have it here. Okay, no. I'm just looking across. Damn it. Don't know where it is. There'll be probably another chart later on. But yeah, so Ethereum is definitely looking bullish. This is looking reversal, bullish. We've got this on the upside, so and we've broken the trend line. It could potentially continue. You can see the moving averages here as that belt. If we can break above it, then we'll probably go to the top of this range. So we have a number of ranges here. We've got this one as well right there. So we might be able to, if we break that, we'll find this level as resistance. I'm going to wrap it up, guys. I think I've talked enough. And where is that chart that I'm doing? Okay. So that's what we have. And there's a scribbling. So let's have a look, a final look, see what's done. All right, so it's still holding. This blue line of mine is a macro fib. If we do this, I wonder if that helps. No, it doesn't. Got all my key levels, guys. 0.786 level right there. Okay. That's it. Have a good day. Please give me a like and share. Talk to you soon. Cheers.